Stop everything, as you're about to see what's coming for the stock market is beyond terrifying. I'm your host, Steve Metre, and thanks for joining me today. In our show today, the stock market rally might look unstoppable, but corporate insiders are selling shares at a faster pace than ever before. Does this mean a crash is coming? Stay tuned. Plus, we have a sponsor of today's show. I'd like to welcome immunoprice antibodies back to the show. You can find them on the NASDAQ under the symbol IPA, and they're at the forefront of antibody discovery and development, leveraging cutting-edge AI and an unparalleled combination of expertise to revolutionize biotherapeutic science and to drive clinical success. IPA is in the middle of a promising swing trade opportunity, one that we think could send their stock swinging up by another 50%. Just wait until you see these charts. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Bloomberg while we make the case where it might be time to get out now. With the headline as corporate insiders are dumping shares at a record pace, and this is setting the gauge of insider sentiment plunging to the lowest level since 1988. And this is a huge warning sign, because if you think about what corporate insiders know, they know absolutely everything. They know when sales are slowing, they know when demand is going away, they know when it's time to buy and time to sell. Now, it's important to understand this isn't a timing mechanism, it's a warning of what's to come. Let's take a deeper look here. According to data compiled by Washington Service, with little over a week of trading left in January, the buy to sell ratio of insiders is at 0.22, is currently on track to be the lowest in data going back to 1988. And that amount of selling doesn't usually inspire confidence with investors, since it suggests corporate leaders who run the companies lack conviction in their own stock. Because imagine this, if you're the executive of a company and you see demand going down, sales going down, profits going down in the future, what are you going to do? You're going to sell at the high, look to rebuy at a later point, and that's why this is a massive warning sign. And here you can see the chart. We can go back to 2018. What happened? We saw insiders selling right ahead of what was a market correction. How about around 2019 into 20, when nobody thought you should be selling? Well, insiders were unloading all the way into the pandemic, and then they turned around and were buyers again. Now, they missed out on 2021 where they were net sellers, but look what happened around 2023 as we went into a massive market correction. Well, they were getting out only to rebuy, and once again, here they are selling at a time when everyone is bullish, because when an insider decides to sell a stock, as we know, based on the data, it is rarely a good sign. But who are buyers in this market? Well, machines have been buying back in, but according to Goldman, they're not going to be big buyers going forward. Here we note CTA flows over the next week are going to be fairly light. Over the next month, they could be, as we note in an update, they could be buying 103.71 billion of global equities, 27 of that into the US. But keep in mind, we see a lot of the global indices are way down, meaning the CTAs could be big buyers of foreign equities, not so much of US equities. But we also look at the case where this is a market where everyone's in. If we take a look at Bank of America's data, as we look at the fund manager survey, what do they note? That fund managers are massively bullish. This is not a good sign, because when they're all in, it's a warning that there isn't any more money to flow into equities. And look at their cash holdings. You're talking near record low at 3.9%, meaning that fund managers are all in this market. We know retail investors are in, and that leaves limited upside potential. But something we think has a massive amount of upside potential, that is the stock for our sponsor for today's show, immunoprice antibodies. You can find them on the NASDAQ under the symbol IPA. Let's take a look at this chart of the swing trade, and that is anytime you get a close above a rising 9-day moving average. Now, ideally, you want it above the 21-day exponential moving average, that shown in green. Here is the first setup here recently. Stock rallied before it triggered a sell signal. Now it entered a second swing trade setup. It's holding support at its 21-day exponential moving average, setting up a big catalyst higher. Do you want to know why we think it can go up 50%? Well, stay tuned to the end of the show. We'll show you the rest of the charts. But who's coming back in online as one of the biggest buyers? And this is important to understand, because it's going to mask the outflows of these corporate insiders. Remember, they're the ones that authorize the buybacks. They're also ones who are selling selling into that flow. The repurchase window opened on Friday, January 24th. This week, we're going to see about 45 of the S&P market cap come back to the market and be buyers against massive corporate outflows. Let's talk about market breadth. And this is really important because we saw here, this is the percentage of stocks above their 50-day moving average. We're looking at the S&P 500. We saw market breadth surge higher. That pushed equity markets up as well. But where does this mean it goes? Well, let's take a look at our screens here. Momentum currently is positive on the S&P. Now, how do we know that? That means the relative strength index, which is at 62, needs to be above 40. That it is. The MACD, or moving average convergence divergence, got to see a positive cross. We've got that as well. Plus, on top of that, we overlay a proprietary indicator that's called our Momentum Time Pro that aggregates those technical indicators. It too, noting 7 consecutive daily buy signals, momentum to the upside. Now, we talk about machine positioning. Look at where we're at. This is our fast algorithm right here. 100% long or slow algorithm is at 55, looking to leverage up. And you can see we give the lead on where machine positioning is going here. It's a very critical indicator. It says how we trade machine positioning to win. It's also, you see our momentum indicators. You want to know how we do this? We're going to show you in today's show. Check out those links in the description below for a 30-day free trial. Plus, while you're there, grab onto immunoprice antibodies again on the NASDAQ and symbol IPA, where we see huge upside opportunity. Now, where do we think the S&P 500 can go? Hard to say because it's now breaking out to all-time highs. We've got the downside target at 593. Let's head over to our charts. And what do we see here? It's very important to understand what we know from insiders is they've been buying along this trend. They know that this doesn't go on forever. You can see they were buying here after this big dip. They bought into that and then sold out and then rebought here at the bottom. Now they're doing again. And this is critical because they know it doesn't go on forever. We look at the technicals, we see RSI up, MACD up, everything saying market higher. Of course, that's when things start to reverse. Let's talk about tech stocks. Now we look at market breadth, but instead of the 50-day moving average, we're shifting over to the 200-day moving average. What do we see? Percentage of stocks above the 200-day at 61.39%. And look what happened going into the end of last week. That trend slipped. We saw a big push, at least of stocks above their 50-day moving average. And talk about needing a tailwind of corporate share buybacks. Well, it's the tech companies that are the biggest buyers. We know momentum is positive. We have 5 consecutive daily buy signals on our Momentum Time Pro. You know, we're not holding a position on these big cap companies. We think there's a lot of other opportunities elsewhere. We're waiting for a bigger pullback here for our subscribers. Upside target, that's 539.15. Downside target at 517. We know there's potential buying here from the machines, just like what Goldman said, which is why we give you the edge on how to trade the machines and trade momentum. Here we see they're just shy of their all-time highs, with corporate share buyback flows set to start coming back online next week as we get more tech companies reporting earnings. Where is support? It's right here at the 513.07. That's your 6-month volume profile. You see buyers came in and bought that dip. There again, the risk here isn't that they're buying dips. It's that this long-standing trend is eventually going to reverse. There's a reason these executives are unloading. One day in the near-term future, we'll find out, maybe at next quarter's earnings. Let's talk about market breadth of the small caps. We see it surge higher. Now, this is over the 200-day moving average. We mentioned this came off of technically oversold levels. The problem is breadth started running out of steam. Price is still pushing up a little bit, but we don't think this is something that's going to last. Now, momentum on small caps, Russell 2000, symbol IWM, is positive. RSI 55, MACD, positive cross. We've got 7 consecutive daily buy signals, but again, no position. We think there's better opportunities elsewhere. And let's flip over to charts and take a look at IWM. And what do we see? It came right into the supply zone. Now, if you don't know what a supply zone is, it's really important to understand it's a zone where there's either people that have previously been buying or previously selling. So now as we look upward of the chart, this is where we see prior sellers at, because what happened, we saw buyers here, we saw buyers right in here, and then sellers came in. So what we're expecting here is sellers to show up. Now, we see the 50-day moving average in green acting as resistance. That's a very bearish signal. Support right here at 221.57. So we see this is the battleground right here. Buyers below, sellers above. No clear sign, but if this market's going to turn and rally, we need the small caps to play catch up. Let's talk about the energy side. This was a great trade. We told our subscribers to buy on January 3rd. They got stopped out on January 22nd. You talk about making trading easy. We put it in our notes. We said buy here and then raise your stop loss. We told them when to do it. They didn't even have to sit in front of the computers and watch this every day. which is fantastic. They just made money by updating their trade book. Let's take a look at how easy trading is this market. Here's energy sector right there. If you're wondering, it's a little harder to use this big mouse pointer. We told them to buy right in here and stopped out right up here. And that made them a quick 5.71% return. Now we're out of that position, but we just added a position here recently in financials. This is large banks. We avoided regional banks. We don't think the opportunities in regionals. We do think there's opportunity in the large banks. That came to our Momentum Time Pro subscribers. That trade right now up 0.71%. Machine positioning long and looking to buy. Of course, what do we know? Why would we be bullish on this? Well, not only did our signals tell us to be bullish on it, but keep in mind, the initial rate cuts from the Fed are considered bullish from the banks, and that is until it's not. Let's take a look at the charts here. What do we see with XLF? And that is a clear-cut run right back to all-time highs. There's a 6-month volume profile adding support. You've got a rising 9-day moving average in orange, 21 in red, and of course, holding support off of the green. That's the 50-day moving average after pulling down and finding ultimately support at the 100-day. So bullish setup, at least for the short term. Well, of course, we'll be telling our subscribers to raise their stop loss levels along the way. Let's talk about the bond market because there could be massive buyers over the next month. Goldman says green sweep across the board in an uptape. They're buying 63.1 billion of, that's U.S. government, not global. That's U.S. alone. They are buyers in every instance. Let's take a look at this because momentum for TLT, this is a long bond, is positive. The RSI moved over 40, it's now at 45. You got positive cross on the MACD, 6 consecutive daily buy signals. But wait a minute, you don't see a buy on here to our subscribers. In fact, machine position on our fast algorithm is pushed up. We even got some push on our slow algorithm, and yet for some reason there isn't a buy signal. Why is that? We told our subscribers to wait. We review every trade we talk about, and then we tell them which ones we think they should do. Let's take a look at why we said hold off on TLT, because what happened here is it rallied up. This is where it signaled. We said, wait a minute, we think there's going to be a pullback into support and confirm here, and then it's going to take off. So we're waiting for some confirmation here on support, and then we'll put this on our trade book. If you're looking to trade the long bond and make some money, we'll show you why this could be one of the biggest trades coming up. But we've got some other trades let's talk about because, of course, we've got immunoprecise therapies as well to talk about. That coming at the end of the show. Again, on the NASDAQ, that symbol IPA. How about gold? Of course, investors were very bullish on gold. Machine positioning long, momentum to the upside. That drove price higher. But we said, if you like gold, trade GDX instead. How about this? Our CTA subscribers at 3.52% on that trade. We put that buy it open on January 10th. All you had to do is look at the reports, see the notes. We told you, here's where to buy. Here's the current stop loss level, because that's right. We review our trades every day. We give you updated stop loss levels when we find them. And this was an obvious trade. Let's take a look at the charts here, because back on 110, and some people would have struggled picking this trade up, but we said right back here it's time to buy this trade. And yes, it bounced all around. There was a little bit negative there at one point, and now it's taking off. Upside target right here at 40.56. So lots of upside, plus you've got support with that 6-month volume profile on a rising RSI, rising MACD, and all we'll tell you to do is when to raise your stop loss levels. Again, don't have to sit in front of the computer to make money trading. How about uranium? This was a huge trade. Back on the 17th, we told our CTA subscribers to buy this, up 8.22%. Our Momentum Time Pro subscribers, a couple days before, they picked up 10.3%. Here's our live stop loss levels. Let's take a look at why this was such an obvious trade and why we think this can go a little bit higher. Now, if you're looking to play chase, this isn't the one to do. We said buy right down in here. You see a 6-month volume profile acted as support, is taking off. We still think maybe 32.88. Of course, we'll be raising our stop loss levels along the way, giving our subscribers everything they need to make money trading stocks. And right now, I looked at our trade book going into this weekend. What do we see on our CTA subscribers? They have about 75% win rate, which is fantastic. Our Momentum Time Pro subscribers, if they took every trade we've been recommending recently, they'd be up on every single one of them. One trade we think is coming down, that's the dollar. We're not in this trade, but this is going to pick up some short dollar signals at some point. We got 4 consecutive daily sell signals on Momentum Timer Pro. Downside target 28.98. You see machine positioning start to back off. You see sell signals showing up in the momentum trades. That is important. Let's take a quick look at UUP here because it is telling us that perhaps the commodity market could surge higher. Here you can see big gap down. Buyers came in, ran into resistance at the 6-month volume profile, and then what happened? Sellers are dominating 200-day moving average right here. This is your line of support. Possibly could get down a little bit lower. Zoom out to the 1-year chart. You could see major support right here around 28.80 in that range. That is next major support, if not the 200-day moving average. Now let's talk about our stock for our sponsor for today's show. This is Immunoprice Therapies, and we think potential upside based on a swing trade setup could send their stock up by as much as 50%. Now, everything you need to know in the pinned comment and description below, because drug discovery is plagued by a 90% failure rate, making the process slow, expensive, and inefficient, with traditional AI models unable to effectively navigate the complexities of biology. The industry urgently needs improved solutions, as AI has the potential to transform the field if implemented correctly, and Immunoprice Therapies believes that they are the ones who can do that. IPA's HYFT technology offers a breakthrough by indexing biology in a way similar to how Google indexes the web, capturing meaningful, structured patterns and linked genetic sequence, structure, and function. This approach addresses the black box problem in AI drug discovery by providing traceable and explainable insights. The Lens AI platform is a biological intelligence system that connects 25 billion biological relationships through retrieval, augmented generation, and knowledge graphs. This enables IPA to design better drugs more quickly, predict toxicity, and optimize therapeutics before engaging in expensive lab work. The AI-driven drug discovery market is projected to exceed $100 billion in the next decade, but many biotech companies struggle to translate AI insights into clinical candidates. IPA leverages wet lab capabilities to effectively bridge the gap between AI and practical application, providing a significant competitive advantage. Investors should pay attention to IPA as it's leading the way in delivering tangible results in the AI-driven drug discovery, while others are merely promoting the technology. With proprietary intellectual property, patents, and established partnerships with major biotech and pharma companies, IPA is positioned to meet the industry's demand for improved AI solutions. And AI is poised to not only enhance but completely transform drug discovery, with IPA being one of the few companies effectively executing AI-driven drug development. Major industry players are taking notice, making it an important opportunity for investors. And IPA has launched the AI-powered pipeline aimed at transforming therapeutic development by combining advanced artificial intelligence with first principles thinking. This innovative approach, exemplified by their proprietary Lens AI platform, deconstructs traditional drug discovery methods to accelerate the creation of effective and reliable therapies. The CEO, Dr. Jennifer Bath, emphasized that this pipeline represents a significant advancement for IPA, positioning the company to address critical needs and set new standards in biotherapies. And all this is setting up is a potential massive move in their stock. Let's take a look at these charts again, because this is a swing trade setup. Now, if you're not familiar with a swing trade is, it's where you buy in after you get a close above a rising 9-day moving average. Ideally, you want the 9-day to be over the 21-day exponential moving average, and we see that happen first time right here. It rallied up, and then after closing below its 21-day moving average and negated that swing trade, it created a second opportunity just days ago. The stock shot up, pulled back into support, validating that this trend is headed higher. And how much do we think it go? Well, it is right up by about 50%, up to 86 cents, currently trading right around 58 cents at the time of filming. You see the 6-month volume profile is acting as overhead resistance, but we saw the last time this broke, it took the stock straight up. We think that's going to happen again, because the trend right now with this swing trade is to the upside, creating a potential massive opportunity on the NASDAQ under the symbol IPA. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.